Good morning. This is a video morning brief for the U.S. stock market. Rich Pass for Critical Point, Tuesday, March 4, 8:21 a.m. Eastern Time. Yesterday was a down day. Loved it. Took out the prior low. The model was right. Level 4 top actually topped even within the price target as well as the right pattern, right amount of time, various indicators. News come in, made them all nervous. Put it down, took out the prior low that I think was a level 3 bottom. The model's willing to go there. If it is, this market's going down into next week. Write that down. Going down into next week. All right, so it's going to get bad. It's going to get ugly. All right, if it's not ugly enough. This is just normal behavior starting a bear market. Okay, this is going to go down huge amounts. All right, now, however, the model is warning that it could put a level 3 bottom in today, the next few days. But the model's also warning it should put a top in this week as well, maybe into early next week. What this does is reduce the amount of time for upside, and what it may be implying that the market can chop around, zigzag sideways to up somewhat, but eventually it's probably going lower. So even if it could find some stability this week, it's probably going lower next week is the best forecast for the level 3 trend, that it can get sloppy on us and still be bearish, or it can just be bearish and then still bearish. All right, level 4s, the bottom can show up this morning and the market's off 40 some points now, so it's looking ugly. All right. That could create a gap down today for the cash market at 9:30. That could set up like a washout kind of pattern to find some stability. But I'm not so sure I want to trust it. I think the attitude is increasingly on Wall Street: sell rallies, sell bounces, sell pops. Billionaire Leon Cooperman, I think he's a billionaire. Sometimes he's too conservative and Republican for me, but boy, sometimes he'll slap him side to head. And he's kind of a cranky guy, in my opinion. But he said yesterday, at least it was on CNBC, reported that he said he's selling every kind of rally he can. All right. Any rate, the level 4 bottom, even though it can show up this morning, it really should show up about 1 p.m. Eastern time into tomorrow. So it can bounce towards the close. It can be down into tomorrow, period, and then bounce for the level 4. I don't trust buying it unless you're really good, just snapping out a quick little gain during the day for a level 4. And I do like the idea of just continue trying to sell pops and for drops here and stuff like that. All right, one way or the other, I think we're going to get this level 3 trend lower. So next, I'm going to go to the daily chart, and I want to go to the S&P 500 cash. Bumped its head near the moving average. Okay, forget if that's 50, 40, doesn't matter. 5-day average, it went above it, back below it, not good. Took out the prior low, not good. I think it needs to go down to 57.23 to the 200-day average, and there's a larger and ever larger group of people on Wall Street that are nervous it's going to do that. Dow Jones Industrials flirted with these 2 moving averages, 3 moving averages, then gave up. I think it's going on down to the 200-day average. And then I actually have a critical point calculation, a target for you of around 42,367 to maybe around 41,963. Okay. And then we have the NASDAQ 100 futures this morning starting to break below the 200-day average. That's scaring people, but it may need to bounce some. It may bounce and give us a sizable knee-jerk reaction upside before just going lower. Don't know yet, but it looks ugly. All right. And then if we go to the S&P 500 futures, this is this morning's trade. And this is something interesting, I think, to watch out for. We have a downside target that has been generated. It's official, 57.34 to about 56.64. Cash would probably be just a little bit less than that. And then it just looks like to me it's down into next week for a level 3 bottom. It's possible it snaps up this week from a level 3 bottom that was a little later, but actually, a little later, into a better time level 3 top. But for the moment, the model's just saying we're just going to look smart and feel smart, that called that right there as the earliest allowed, even though it really shouldn't work that way. At least we saw some things saying we better be more aggressive, more careful here. I think the real level 3 top will occur in the next few days. It's not going to matter. It's barely going to pick its head up. It's just academic stuff. It's just topping on the way down. I think this is just over and done with. The goose is cooked. We've got lots more downside coming here. All right, let's go to the weekly chart. And as we look at the weekly chart, S&P 500 cash. Wanted it down, got it down. They were making me nervous. It was going to be up on me. It's already met this best target and going below and ahead of schedule. So we need to consider all the way down to maybe 56.40. Okay, and it can get much uglier. Let me stress this. We might be on the verge of a 60% crash, minus 60%. Anywhere from minus 60 to minus 30% crash. We may yet see minus 20%. And that's about it. And it meets Wall Street definition of a bear market, but it'll be news it's too late. It could bottom then. We at least ought to see minus 7 to minus 13% that I've been talking about way back last year, that we ought to have that by this year. We're working on it. So that's all over the map of just how serious this will be. And I don't think there's any really magic numbers to this, because there's so much wild and crazy news with this tariffs and destroying the U.S. I'm going to be talking more of this, but I'm now calling Republicans communists. I now feel we are in corporate communism. It's a new type of communism. They're really trying to control our lives, control the people. And just because they're so determined that there's some kind of mission the U.S. ought to be on. And for you young people, you got to be careful with this. Don't let this happen, because if we don't straighten things around in the next few years, we could set up for the next generation of the next 17, 27 years of being maybe even a lost generation, but at least being held back. And if that occurs, then we're probably setting up for the lost century, and China will win. And some of Europe will win. Any country that has national health care is going to win. Any country that has a different education program than what we have, okay, that shows that it really has worked, that it's putting in good quality people into the jobs arena, like what China's doing, like what some of the European countries. They're going to be the winners, okay? And we could screw up here for an entire century, okay? 100 years. Sad but true. All right, any rate, the best I can tell you, if it picks its head up, I think somebody's just going to sell this. This indicator's acting so bearish here that it's suggesting lingering downside momentum the next 1 to 3 weeks. I think we're going to get it. I think it's lower into late March to April. They may beat it up so much that the bottom comes in ahead of that, but it won't be able to go up much until that bottom's in place. I'm that confident of it. I think the model's got this nailed, okay? Any rate, Dow Jones Industrial met minimum target and go on down to 42.5, but it can go all the way down to 41,000. And then I got targets much, much lower. It's just anything and everything of how bad it's going to get. The breadth doesn't look all that bad to me yet. It might be ready to keel over, but it's not bullish. The mid-cap, small-cap stocks, ugly. The equal-weighted index, S&P 500, ugly. Everything's ugly, okay? That's all there is to it. It's ugly, and interest rates are dropping, and they're making problems for the model. I'm not feeling so smart here, and we're going to come up with alternate scenarios in coming months, but we may have lower interest rates all the way to May, June, July, because we are going into a recession, okay? So I don't have much there for help, and I really don't have any signals for anything. I mean, everything's just bearish. That's all there is to it. Well, yeah, bearish interest rates and bearish the stock market and bearish the dollar. The dollar is kind of a messed up plan. We're going to have to make some alterations to it, but I don't need to worry about that yet. Now, there's discussion on Wall Street. The VIX is not high enough for all that's going on. Why aren't people more worried? Why aren't they selling? And the answer to that is I think they're selling stocks, so they don't need so many of the options that are used to calculate the VIX. Okay, so I think they're more bearish than they're saying, but in general, I agree with them. I don't think this country's woke up how bad this is going to get, okay, or could get, all right? I don't even know for sure. But this VIX could really explode on us now, and the minor long-term cycle is up for the VIX. but it may not go much higher. It's done some of the work I was expecting anyways, even though a lot of this stuff coming at us from the government side, and Trump is government. And if you hate government, you have to hate Trump's government because it's a government, okay? He owns and runs the government. All right. So the next thing we have to look at then is what are we going to do on and I'm losing my train of thought here, trying to keep a timer on to make sure I don't talk too long. All right, next up. Okay, some of the things I want to discuss here. Tariffs. Canada says they might shut the electricity off and gasoline and oil and stuff too, at least in the northern U.S. I hate to see it because I'm probably going to get hurt by it, but I almost feel like they should do it. It's time for war. Let's kill, let's blow up, let's destroy, let's have a revolution here, let's get going. And you young people, you really got to get going there. You want national health care. Don't listen to these morons, okay? You want national health care. You want a brand new education system. Take this government and be thankful they're wrecking it because now you can build it the way you want it and don't build it like the MAGAs. They don't know what they're doing, okay? They don't know what they're doing. Very, very dangerous people. All right, at any rate, so on the commodities side, we've got an issue here where Trump's now even going to tax U.S. Food, grains leaving the country, okay? And he's warning farmers, you better batten down the hatches, you're going to get hurt. And I thought, wow, talk about shooting yourself in the foot. Wow, talk about aggressive isolationism. It's the wrong thing to do when looking at these mega cycles all the way up to 1,000 years relative to Asia versus Europe versus U.S. It's the wrong thing to do. The Chinese, you're just making it easier and easier for the rest of the world to beat the U.S. Why do we want to just hide? Why do we want to put our head in the sand and, we just can't get involved in the world anymore. Woe is us, What a bunch of nonsense. All right. Any rate, now I'm getting carried away again. This is my second shot of the video because I got too carried away on a rant. So at any rate, I got to warn you, I think there's just downside right into May, June, July. We can still get a bounce in April. I think there's downside in the late March into early April and then get that bounce. I think there's downside in the next week, but there can be gyrations here of snapping things back, and they're already doing it as I'm speaking here. I'm on the wrong thing. What am I doing here? Okay, wrong chart. Here we go. That's what I want. That's this 12-hour chart, and down 43 right now. That's a delayed price. I'll go to the 6-hour chart, which is more popular within the modeling, okay, more useful. Again, I think it's probably down into tomorrow, but it may bottom sometime today and actually be up tomorrow. I think it's down into next week, but it can bounce some this week and then down next week. I think it's down into late March, early April. Then we probably will get a bounce. And then I think it's back down May, June, July. In terms of the long stuff on the monthly chart, in my opinion, there won't be a long-term bottom until May on into October. If they beat this hard and furiously here in the next few weeks, I may have to take a gamble on an early long-term bottom. But yes, I am saying we are in a bear market. We haven't done enough yet to really prove that, but I think it's coming, folks. We need to be careful here of how we handle it. No reason to bargain hunt here with all the stuff that's going on here with the government, Trump and MAGAs, and relative to the world and relative to the American people. I mean, Trump's basically declaring war on the American people even. And many Republicans are now saying, wait a minute, this is not what we really voted for. Or they'll say, well, we knew, but at the same time, we didn't think you'd do it. And I'm like, my favorite Republican friends are saying, what the hell are you talking about? He said he was going to do it, and here you are. This is going to get ugly. Social Security can shut down in the next 60 to 90 days. It could take many months to actually bring it back. Big delays. And then I forgot about the debt ceiling. The debt ceiling is still coming. That may be a disaster in the next 11 days or a little bit longer. I forget the amount of days. That's going to be the next thing coming up. Past results are not necessarily indicative of future results. Have a great day if you can. I guess we just need to say, hopefully all this bad stuff's going to wash things out and we go on to better times. But I got to warn you, you Republican people, and I'm now working with a couple of young Republican guys that want to get into wealth management because they think this is all going to be great in the future. No, real growth under Republicans is 1 to 1.5%, 2% GDP, lower than where we are now, although GDP is probably crashing. And the Atlanta Fed yesterday they slammed it down on Friday by minus 1.5%. And now yesterday slammed it down to minus 2.8%. It's, that indicator is wild and crazy, not necessarily that accurate, but it really is worth looking at and considering. I think this economy is crumbling so fast we don't realize how serious and bad this is going to be. And no, the stock market is not going to be all that profitable in coming decades unless we have national health care education, get the heroes in there for the high phase on all this generational stuff, get the millennials fired up, get the Gen Zers up, get the baby boomers out and gone, or they need to return back to their hippie days. Start bringing in that stuff, then we have an opportunity of 300 to 600% over the next 2 to 3 decades. Otherwise, cut that in half, maybe even cut it to just a third. Have a great day.